Hi, my name is James Ng, and I'm a senior director with Old Capital. And today we're going to be talking about the Freddie Mac Small Balance Loan Program. And so recently we just closed two loans with Freddie Mac Small Balance, and I thought it'd be a good time to really explain when to use the Freddie Mac Small Balance Loan, typical loan terms, advantages, disadvantages, and go through a couple case studies, and then also sort of next steps if you want to move forward with a loan like this. So my background, born and raised in Houston, went to school in Austin at UT, and then I've lived in DFW now since 2006. I was a loan underwriter for G Capital Real Estate from 2007 to 2015, doing over $750 million of office, industrial, retail, multifamily, self-storage, all different types of commercial properties across Texas. And then the last 5 years, I've been at Old Capital originating multifamily loans, over $750 million across 125 properties. And then during that same time, since 2015, invested in about 26 properties across DFW, Austin, San Antonio. 5 or 6 of those have just sold in the last year. So about 21 properties, 6,000 units right now. So when to use a Freddie Mac small balance loan? Number one, acquisition of a stabilized property. So if it's 90% occupied for 90 days, limited deferred maintenance, not a huge rehab budget, that works on acquisitions. And then also refinance. So if you have a bridge loan, whether that's a bank loan or a non-recourse bridge, we can come in, refinance the existing loan, do some cash out, and provide longer term financing for you. So here's some typical loan terms on a deal that we're going to talk about. So there's a 5, 7, 10-year option. On this one, it's a straight 5-year loan, 7-year loan, 10-year loan. You can get anywhere from 1 to 3 years interest only, and then it goes 30-year amortization. Usually when you have a 5-year, you're at 1 year interest only, 7-year, 2 years interest only, 10-year, 3 years interest only. And then you have the option of two types of prepayment. One is yield maintenance. Second one is step down prepayment. So on this one, you can see right here, so it goes sort of 5, 4, 3, 2, 1. And then depends on the term of your loan that'll dictate the prepayment penalty. All of these are going to need a 125 debt service coverage. If you are in a top market, then that is an option to use a lower debt service. Sometimes they go down to 120 debt service. Max loan to value is 80%, and then rates right now are about 4 to 425, depending on the market that you're in. And then on the very bottom here, you can see, they have a processing fee of about $2,000 to $3,000. Third-party fees, which will be your engineering, environmental, appraisal, about $7,000, and then closing costs for legal about $6,000. And so you're all in about $15,000, and then any sort of origination fee is typically 1% of the loan amount. So this one, we flipped it over and used yield maintenance. So you can also either choose step down or yield maintenance. So on yield maintenance, you're going to have a lower interest rate, but then it's going to be more expensive when you exit the deal. And so that's another thing to think about. And another option that they have is what's called a hybrid loan. So these are 5, 7, 10-year hybrid quotes. And it's fixed for a certain period, let's say 5 years, 7 years, 10 years, and the remaining period, so it's a 20-year total loan term. That floating rate period after the fixed period is going to be LIBOR plus anywhere from 3% to 3.5%, just depending on when it's quoted. And then you're still looking similar debt service coverage, similar prepayment penalty. And then during that floating rate period, during the hybrid, it is a 1% prepay. So let's go into some of the advantages of why people use Freddie Mac small balance loans. Number one, non-recourse. So it is similar to Fannie Mae, non-recourse loan. Number two, you lock your interest rate at loan application. I mean, this can go either way. Usually most people like locking it in upfront. You don't actually pay anything for that lock at loan application. And so that ensures that your interest rate doesn't move during the loan application process. The minimum loan amount is only $1 million. And so that is a huge advantage for a lot of these smaller properties. you can, most properties, 20, 30 units, that you hit that minimum loan amount of 1 million. Up to 80% LTV. A lot of recourse banks top out at 75. As long as you can get that debt service above 125 in the sizing, then you'll be fine on that 80%. 1 to 3 years interest only, huge advantage once again, especially if you go on a 10-year term, get 3 years of interest only. And then 30-year amortization after that. So most bank loans are anywhere from 20 to 25-year amortization. So you're getting the 30-year. Low closing cost, 10 to 15,000 for your third parties. And then longer term is available. So what that means is most bridge loans are only 5 years. So here you're able to lock in the rate for 5, 7, 10 years, and then even sort of mitigate that maturity risk with that hybrid. So 20-year hybrid after the fixed rate period goes into that floating rate period. Some of the disadvantages though, no rehab is rolled into the loan. So any rehab that you're going to need, let's say on the acquisition, that is going to have to come out of your own equity raise. Number 2, maximum loan amount is $6 million. And essentially all markets except the top 6, 7 top markets that Freddie Mac designates. And then your loan approval is subject to Freddie Mac approval. So every deal must be submitted. There is no delegated underwriter. You have to submit every deal to Freddie Mac. And it can be a longer process. So it can be 10 business days for approval on a lot of these deals. And so just build that into your timeline. On a refinance, not as big of a deal, but on acquisition, for sure, build that in. So let's go through a couple of case studies. Ridgemont Apartments, this was a 60-unit deal in Fort Worth. Acquisition, 95% occupied. Purchase price, 3.65. Loan amount was right at 75% LTV. So the rents were under market on this deal. And the debt service really sort of tapped out right at 75%. They went with a 7-year loan term, 2 years IO, 30-year AM thereafter, 4.25 interest rate, and then a step down prepayment. So this worked for them because most deals, like let's say on Fannie Mae, you would have been yield maintenance, interest rate would have been higher, and then also if you went with a bank loan, it would have been recourse to the sponsors, and then also the amortization, it probably would have been 1 year interest only and then 25-year AM thereafter. And an interest rate of 4.75 to 5. So in terms of interest rate, in terms of leverage, IO, step down prepayment, this one sort of checked all the boxes for the sponsor. And so that's why they went with this Freddie Mac small balance loan. Number 2, Shadowood. So this was 60 units in Garland and fully occupied. We had done the bridge loan for this investor about 2 years ago. And he came back and said, look, rents have gone up 10, 15%. I think the value, is a couple million more than when I bought it. And so we went in, got the deal sized, and he was able to essentially pay off his old loan, return a lot of capital back to investors, essentially 100% cash out on the deal, new $3.5 million loan, 20-year loan term, 1 year IO. So he did the hybrid program, 1 year IO, 30-year AM thereafter. He got 5 years fixed at 4.06, and then it went floating for the 15 years. And then he actually opted for a softer prepayment penalty. So the standard prepayment is a 5.4321 on a 5-year deal, but he opted for 3.100. So that costed him a little bit more on the interest rate, but overall a great rate. And so why do people come to us here at Old Capital? We do close to $1 billion in loans the last couple of years. You can see all my closings at texasmultifamily.com, pictures and more of that. And then, so we really find the best loan terms and rates for you. So we're very familiar with Fannie, Freddie, non-recourse bridge lenders, local banks, regional banks, and really get you the best loan terms and rates, but then also saves you time throughout the process. Experienced team. I was a former underwriter for the last 8 years previous to coming to Old Capital. So understand what the bank needs, when they need it, and why they need it. And then we do 1 out of every 3 B and C apartments here in DFW. So we really understand, every deal, inside information onto every transaction. And if you haven't heard our podcast, go to oldcapitalpodcast.com and subscribe there. So next steps really, subscribe to this channel, like the video, And if you want more information about Freddie Mac small balance loan or any potential loan programs, complete a personal financial statement and set up time to talk to me via email, jeng@oldcapitallending.com, or you can reach me on my phone at 214-300-5035. All right, great. Thanks, guys.